It's a very good time to invest in all four of the precious metals. I think silver is down severely. Gold is still down, and platinum is actually down. Palladium's been doing well, but it doesn't mean that it's peaked.
A rare situation is allowing you to buy some ETF stocks for 50% off. Learn more at crushthestreet.com/profit2017.
Hello everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and what is going on in the metals complex? Gold, silver, and we're even going to get into platinum and palladium today. On the line with me today is Chris Blasi, and he's with NeptuneGlobal.com. That's the website, and the Neptune Global Exchange, Global Bullion Exchange, is something we're going to talk about today with one interesting addition to the precious metals market. We're going to be talking about the PMC Ounce, and without any further ado, you're going to enjoy this call a lot today. Chris, thanks for coming on the line with me.
Thank you, Kenneth. I really appreciate it.
Chris, let's start off here with what is going on in gold. I mean, we have talked about this in the past with other guests, gold being in a secular bull market. But for many people who've watched gold go down from 1900 to now below 1250, it doesn't really feel like a bull market. Any thoughts on this?
So I think we are in a bull market for sure. It's a secular bull market that began around 2001, pretty much ran up to 2012, and, had that 3-year consolidation and pullback, and it really did turn around in January of 2016. So, we're really 2 years moving back up, even though we obviously haven't come close to that 1900 high. But, the fundamentals have been telling, or the believers in precious metals and gold, know that the fundamentals at some point have to bring gold far higher. But there's interference in these markets, and I think those that interfere have been very successful at breaking the spirit of those, who want to secure their wealth and preserve their wealth in precious metals. But if you really look at the chart, especially over the last 2 years, and if you want to look at the last 6 months in particular, the last 6 months, we continue to have higher highs and higher lows. But, once gold starts going up, everyone gets excited that this will be the ultimate breakout, and then it gets hit again. But, if you look at the chart, it's actually healthy. But, psychologically, I think the spirit has been severely damaged, and a lot of people have lost heart.
Okay. Well, you know what? You offer a very unique product. It's patented, and there's 4 components to it: gold, silver, platinum, and palladium. And it's a diversified way of being able to invest in the metals. And I want to talk about silver. Silver has that monetary component along with the industrial component. So I'd like to get your thoughts on where we are with silver, and then also platinum and palladium as well. Those being more in the industrial side, even more so than silver. So your thoughts on silver and where we are right now?
Sure. Silver is obviously a lot of individual investors went heavy into silver. In 2011 and 12, a lot came in at, in the 40s as it was bearing down on 50. And it got hit in that pullback, in that 3-year pullback, far worse than any of the other metals. I believe that silver is really in short supply, that there's a lot of interference in the market, that eventually the market will break, and silver has tremendous upside potential. But it's a smaller market than gold. It's actually easier to interfere in. And, I think the spirit of a lot of silver investors has also been tested. So now you also mentioned platinum and palladium. They don't have the attention that silver has. And, they have industrial uses that really there's been no substitute for. And they fly a little more below the radar, even though there's talk that there's a bit of a shortage of palladium, and that's a big driver. But, coming back to what you said, we're believers in a truly diversified physical precious metals portfolio. Now, it needs to be weighted. You wouldn't invest the same amounts of money in platinum and palladium that you would gold or silver, but exposure to those metals are important. I mean, if you look at the last 5 years, in 2013 and 14 and 15, as gold and silver got crushed, palladium was doing quite well. And even though gold and silver are up net over the last 2 years, palladium's up even more. So, that's why diversification is important, because, you just don't want to invest for an asset that ultimately will give you a great return, but you want to manage that volatility in the interim, right? And we know that, people went heavy into silver, as I said, in 11 and 12. And right now they're suffering severe losses. And if they need to raise cash for personal reasons, a lot of them are experiencing severe losses. So, portfolio management also means, diversification and mitigating heavy volatility. And that's what we do with the product that we have that you mentioned, which is a truly diversified physical precious metals investment asset.
Chris, you mentioned gold and silver, and you made the case for why at this point, being that they're so far down and gold moving up and silver doing what it's doing, why there's so much value in it. And it makes a lot of sense why you want to diversify. And that's true across the investing spectrum. But in platinum and palladium's case, would you say this is a good time to invest in those metals, or is it more of a diversification option for someone's portfolio? Or can we say, hey, just like silver is at a low point right now, gold's at a low point, the opportunity to invest in platinum and palladium is very, very good right now?
Platinum and palladium it's a very good time to invest in all four of the precious metals. I think silver is down severely. Gold is still down, and platinum is actually down. Palladium's been doing well, but it doesn't mean that it's peaked. Now, sometimes people want to market time, right? And that's the biggest mistake. It usually is a fruitless endeavor. So the last thing, I would suggest is someone hears a good story about platinum or palladium and then decide to go all in. I mean, that's why our approach is you can't market time. We offer a turnkey, diversified, weighted asset of physical precious metals. So you don't try to pick when to go into silver, when into gold. You just go into it, and you're automatically properly diversified. And over the next, several weeks, months, and years, one metal may perform better than the other. But net, what we offer is going to capture a blended return, and is going to mitigate and should mitigate the volatility that you're going to get from being in just one or two metals, and also trying to market time.
All right, Chris, so let's talk about this. The PMC Ounce. When I first heard this, I was thinking you created some new product here that is a combination. You melted gold, you melted silver, you melted platinum and palladium, and we got this new coin with this mixture of metals here. Tell us what this actually is for anyone just learning about the PMC Ounce.
Sure. So that's a great question. The initial reaction to many people are, that we melted metals down and created a Franken coin, or a Frankenstein of coins. And that is not the case at all, because, one of the key components to a precious metals investment is what form is it in, right? Is it in a good delivery bar form, an LBMA approved bar? That gives it liquidity, same with coins from, sovereign mints. So what the PMC Ounce is for each PMC ounce you buy, you get there's a fixed fractional amount of gold, silver, platinum, palladium that is acquired, is in an allocated account and put in the client's name. Now, if you buy 1,000 PMC ounces, those fractional amounts aggregate up to a total number, and that's how much metal is then assigned to the client in the depository. And that underlying asset is just LBMA approved bars. 1 ounce bars, 10 ounce bars, kilo bars of all different sizes, but all fully liquid bars. So that's the beauty of it. It trades with the ease of an ETF, but it's not a securitized product. And the underlying asset that the client owns are LBMA approved bars in a non-bank depository. And because of that, you have this tremendous liquidity, and it actually even has a delivery option. Unlike GLD, which technically has a delivery option, but isn't really feasible for any investor except a handful. And you can also be denied, even if you qualify on paper. The PMC ounce can be liquidated, and there's options of what metals you'd like delivered to you in what form.
Yeah, so that's a good individual ownership of the metals, and when you buy the PMC ounce, it's weighted. So does the weighting change as the metals move up and down? How does that work out, or is it just by ounces, or is it by value or by ounces that you guys weight the metals?
So that's a great question. So each PMC ounce is the same fractional amount of gold, silver, platinum, and palladium. That could never change because a PMC ounce sold 5 years ago has to be the same as a PMC ounce today. So
by weight, right? That's what you're saying.
Exactly. So each PMC ounce is so much gold, so much silver, platinum, and palladium. Now the price changes as each component's market price is changing, and that shows on our website. Everything's in real time. That product trades real time, but the physical quantities don't change. Again, it keeps a PMC ounce from 5 years ago going to equal the same weighting of each metal as a PMC ounce today and 5 years from now. And that allows it to be, freely exchanged and easy to quote and price.
So Chris, when someone decides to take partial delivery of their PMC ounce and leave some of it in there, or take it in cash, or whatever it is that they want to do, that obviously distorts the integrity of the PMC ounce. It's not. Is it at that point? Now you own so much silver, now you own so much gold and so much platinum and palladium, because obviously you've distorted the actual integrity of the ownership of the PMC ounce. And I'm just kind of curious at what happens at that point, or does it need to be fully cashed out in that sense?
So you can't cash out an individual metal. You have to cash out an individual PMC ounce. So if you say a client had 3,000 PMC ounces, and that represented, so many ounces of gold. If you wanted to take delivery of that, you have to sell a amount of PMC ounces. You can't just sell the gold portion. That's exactly right. You can't create an imbalance in the depository. So you say, okay, if you wanted to take delivery of some metals and you wanted to convert some of your PMC ounces, you would have to pick a quantity of PMC ounces to sell, not an individual metal, leaving the others behind.
Right.
Now, the spirit of it isn't just to buy and convert. If a person just wants to buy and convert for delivery right from the get-go, we would just work with a client and come up with, the optimal for them, a configuration of what should be delivered. But it's an important option because we don't know where things are going in the world, and we want that to be available to clients.
Sure. No, and that's I'm glad you cleared that up. So there's something that you have here, and it's called confiscation hedge, a topic that you guys discuss, and something that is an attribute of the PMC ounce. And I wanted to ask you, is there a risk, in your opinion, of precious metals being confiscated? And why is the PMC ounce a hedge against the risk of confiscation?
Great. That's a great question. So, everyone in this business has known that, this has been bandied about, this topic, for years. Personally, I feel that the chance of confiscation is low, right? I think that confiscation is used by a lot of dealers as a way to herd clients into non-bullion products, into, proof sets and numismatics. Couple things. First of all, when confiscation happened in the 1930s, we were on the gold standard. And for the government to create more dollars in order to help, juice an economy mired in depression, they really needed gold. Well, those handcuffs aren't here anymore. I mean, trillions of dollars get created without the need for gold. So really, the fundamental reason for the confiscation in the 1930s doesn't exist. Now, it doesn't mean maybe there couldn't be. I will leave that as a possible option. I think more likely you may get a windfall profit tax if gold goes up too much. But back to the point of why the PMC ounce will serve as a hedge. Confiscation, one other thing to clear up, didn't mean just taking gold without compensation. You will get compensated based on precedent. Now, it may not be fair because in the 1930s they revalued the dollar versus gold, but they still were given something. So let's jump to the present. If a person has the PMC ounce, they now own gold, silver, platinum, and palladium, as opposed to maybe just all gold. If on the small chance that you get a call-in of the gold, what will happen to the PMC ounce holder versus the gold holder? Well, the gold holder is going to be compensated in current, whatever the current rate is based on precedent, and they'll probably be at a loss because they now no longer have their gold, and gold will probably continue to appreciate versus the dollar. Now, for the PMC ounce holder, they too would be compensated for their gold and would be surrendering. We'd have to surrender up the gold portion. But that's leaving silver, platinum, and palladium. So therefore, they have three metals that haven't been used as central banks as a reserve, especially platinum and palladium. So therefore, those remaining metals should obviously go up in price exponentially because they'd be the last physical precious metals available for an individual investor. And that's how it would serve as a hedge. So, you have gold, you have a good, healthy position in gold with the PMC ounce, but if anything should happen to that because of it being called in the unlikely event, you now have a substantial position also in silver, platinum, palladium that is going to be the remaining store of wealth in the world.
Well, good deal. Chris, I appreciate you coming on the line and sharing these thoughts and sharing your this offer with us. I mean, we all love precious metals and the opportunity to be able to expose ourselves in this new platform. And I'll just tell you this, there are certain products out there that make me nervous, but when you boil it down, you're talking about essentially just owning gold, silver, platinum, and palladium. It's not even like a gold backed debit card in that sense, where it seems a little more confusing. This is simply owning gold, silver, platinum, and palladium, and very cool. So if people want to be able to reach out to you or acquire, do business with you guys, where would they go and what would they find?
Sure. Probably the easiest place is our website, neptuneglobal.com. Our contact phone numbers are there, and we also have a contact page. We also have some great tools on there to really crystallize and envision what you're transacting in when you're buying and selling the PMC ounce. We have tools there like the PMC calculator, and it allows you to do a real-time trade. I mean, it's a mock trade, but the data isn't static. It's the real-time price. And it gives you the details of what the purchase price is, but more importantly, how much gold, silver, platinum, palladium gets acquired with that purchase, how many dollars of that total amount invested goes into each metal, and the percentage of your investment going into each asset. And it really clearly demonstrates the weighting, that it's a diversified portfolio, but it's logical, right? Gold still being the primary metal. And, I really think that has helped, and the feedback has been from new clients and prospects that's really helped them understand the product. We also have bullion specialists that we'd be happy to talk with anybody. And we're actually, the PMC ounce is now being distributed and sold and traded by additional dealers. So the product is growing rapidly. It's not brand new. It's been in the market for over 5-6 years. It's just getting more and more traction as the word gets out.
Well, exciting stuff. Chris, thanks for coming on the line with me today. I really appreciate it.
Kenneth, thanks a lot. I really appreciate the opportunity to share this.